and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. Good evening. And once again, here we are, Sunday night, beautiful Sunday night right here in the Western New York area. I hope it's nice where you are too. Okay, let's get started, gang. I see a lot of people still joining us here, so I want to make sure that we get everybody in here together. Come on, come on, lots of room in the front. Come on, get up here, folks. We got lots of room right here in the front. All right. Okay, here comes the participants. All the participants are lining up. Doors open. Doors open. Ready to bring you in. Okay. All right. All right. Good to have you all here. All right. We are streaming live. I just got to hit this record button and we're all good to go. Good evening, everybody, and welcome to DayTradeSPY.com's weekend review for Sunday, July the 19th. 2026, and hello to everybody out there. Hello from St. Louis. Hello from Houston. Hello from Chicago. Hello from New York. Hello from Orlando. Oh, okay. All right. Good to have you here. There's a picture of me. Yes, there I is. Okay, July the 19th. And let's get moving here. I don't want to keep you all night. I keep promising you this every week that I'm not going to hold you into the over an hour, but we somehow squeak through it, and I don't want to do that this week. I want to make sure that I stick to my guns and and maybe even let you go a little bit earlier. Okay, here's what we're going to talk about tonight. Here, last week in review, the upcoming week. Give you a little bit of a 2-minute tutorial, and I think this time we're going to keep it down to 2 minutes. All right, we're going to also answer your questions, and we have a little contest at the end. We are going to send you triumphs and tragedies, right? Triumphs and tragedies. It's not a skill testing question or anything like that. It's a random number generator. Those of you who've been here before, you know how it works. So, all right, let's get moving, folks. Here's the standard disclaimer. Let's read this here for a sec. Give you a couple of seconds to read this, and then we're going to get into the session here tonight. Okay, excuse me. I'm just gonna get a drink of water here or something to soften my throat. Ah, tastes good. What is this? BioSteel. Okay, gang. You alone are responsible for all your own trading, and past performance does not guarantee future results. All right, my name is Hugh, and I've been trading a long time. Why listen to me? I'll tell you why real quick. Been trading publicly since 2010. Now we are in our 17th year. Mastered some pretty cool techniques from the trenches. Short-term breakout trades multiple times a day. That's kind of what I like to do. And I thrive on the success of others. If you want what I have, you got to do what I do. People sometimes wonder, you're an old guy. I get these young guys out there. I see the TikTok videos. Hey, you're the one that I made $38,000 in half an hour. Guys, I'm going to tell you right now, that's not the secret to success, okay? Maybe, I'm not saying they're wrong, but maybe they got lucky once or so. I hate watching those guys. I hate because they discredit the whole industry. You want long-term success, okay? It's not going to be some guy who's going to drop the F-bomb all over the place. So if you think that's attractive, come on, let's get serious. Folks, you want somebody who has experience, who has the knowledge, who has the patience, the empathy, all of those things that you need to become a successful trader, all right? I mean, if you want, we can line up in front of the private jets and Ferraris and all that too. We can do all that too. That's not a problem. I don't think that you're that dumb that you're going to be impressed by all that. Okay. I mean, you know that. Come on, guys. You want to align yourself. You want to learn how to trade. You want to align yourself with those people that know what they're talking about. They've been through it all. My cohort in the trading room, John Johnson, his name, between the two of us, we've been misguiding you for a while. We've been saying we got over 45 years. It's actually wrong. He's got over 30 years and I've got over 30 years. Well, my quick math says that's over 60 years. Okay. We've seen, there's not a whole lot the market can throw at us that we haven't seen before. Okay. Even though no 2 days are the same. Folks, I'm going to tell you right now. Okay. You got to follow those people like us who have been there, who have experienced all the ups and the downs and who know how to maneuver through this chaotic business of trading options. All right. Um, and these are, we are the ones that you need to follow. Okay. It sounds like I'm really boastful or arrogant, and I'm just telling you the facts. Okay. John and I have been there. And John's motto is very simple. His idea of success is doing what you want when you want, and basically take what the market gives you. And I'm along the same path. And when Eagle brought us together, it's like we found our mothership. We've both been saying the same thing all along. Take what the market gives you. The market's not always going to deliver what you expect, what you want, but it's going to give you some pretty decent opportunities every day. And that's what we do. We identify the opportunities, we take the opportunities, not all of them. There's some trades we just say, let that one go. I'll take the next one. And people say, well, why are you letting that go? So, well, I don't know. I just didn't feel comfortable with it, or I didn't want to. I just came off a trade. I want to, relish the moment, whatever. When you go back every day and review the charts every day, you should do this. Every day you should go back every day. When you go to bed, you should reconcile in your mind and all the good things that have happened. Be thankful for all the good things that have happened. See where you could have improved things, where you can maybe, not messed up. You know, but in the trading world, you should also go back at the end of the day and just look at those charts and see all those wonderful opportunities that the stock market actually gave you to make some money. You'll find that every day there's a whole bunch of opportunities where, oh my gosh, I could have made a lot of money on this if I'd have just entered the position here, exited 2 minutes later. It happens all the time. So why do we lose? Well, usually the enemy I found was the person in the mirror. As soon as I recognized that to be the truth and realized that it's my own fear, greed, that's my big one, greed with the market, ego. I'm not going to let the market work against me. No, I'm going to tell them who's boss. Okay, we'll see about that. See how that works out, right? Well, but as soon as I found out that the market is actually your best friend and the enemy is the person in the mirror, it's a very humbling experience. That's why they call me Humble Hugh. And suddenly my fortunes turned around because I started taking what the market is going to give me. And if every day I just take a little bit off the top, it's amazing how nicely your account can just simply grow to the upside. So anyway, if you want what I have, you got to do what I do. Well, those are the words that I'm going to stick with. Let's take a look here, folks. Spy in the Market is a newsletter. Every week it goes out, goes into your inbox, right? Every Thursday. It's free, 3-minute read, very brief read, very light, informative, entertaining. It's not going to take you a whole. It's not going to take an hour to go through, and very detailed. And it's a very light, relevant, entertaining read. To subscribe, just go to our website, DayTradeSPY.com. When the little pop-up comes up, leave us your email address, and you are going to get the DayTradeSPY newsletter. Now, if you don't want to subscribe, but you still want to read the newsletter, simply go to our website, DayTradeSPY.com, and up at the top left, just click on that. It'll say newsletter, and you can see all the old newsletters all listed there. I think we got around 150 of them or something like that. This week's topic: how will the S&P perform in the second half of 2026? How's the S&P going to perform? We're going to give you some insight into that. All right, let's move along here, folks. Let's see what happened to the stock market this week. This last week, I should say. We're going to kind of quickly go through this because it's not where the market has been. That's as important as where it is going. All right. That's what I always maintain. Folks, by the way, any questions or comments, you'll find a little your little questions box icon on your Zoom dashboard. Click on that. I'm the only one that sees that, so go ahead and say whatever you want. All right, very important. All right, Monday, escalating geopolitical conflicts. We're going to see this back and forth a lot. Geopolitical conflicts in the Middle East, all right? Iran, U.S. Oh, we have peace, we have war. We have peace, peace and war, peace and war. Oh, we saw a massive sell-off in the semiconductor and the AI stocks, pushed down SPY several notches on Tuesday, and of course, ran back up again because we had CPI numbers, inflation numbers. They were lower than expected, and that means they're anti-inflationary, which is really good because anti-inflation means that there's less risk of interest rates, right? Less risk of interest rates rising, and the market likes that. So the market regained most of the losses from the day before it closed. After some bounce, closed near 752, got back up into that upper range. Excuse me. On Wednesday, cooler PPI data, some more producer price index. There's some more inflation data, and a strong start to corporate earnings. At the S&P 500 gained 0.38%, mostly in the tech and the mega caps. We had a little bounce in there in the middle there, but it came back up to prove that no, we're not going to stay down here. The bulls rushed back in around that what's that about 752 level. And then we had recent highs, 756.22 in pre-market on Thursday. As the volley back and forth with the tech and the semiconductor stocks. Well, we had disappointing Netflix numbers, projections. Turned into another sell-off. Dragged the S&P down 0.51%, led by Taiwan Semiconductor Manufacturing, TSMC, the world's largest semiconductor manufacturing company. Despite recording record earnings, there's mass sell-off in South Korea on that. Friday, the heavyweights, NVIDIA, AMD, as well as Netflix, continued the downstroke on SPY, driven more by conflict in the Middle East than anything else. Wrapped up today somewhere around 743, a little over 743. We'll see what tomorrow brings. All right, but this is what happens, right? The market goes back and forth, back and forth. And if you don't like the way the markets are right now, just kind of wait a little bit. If you have time, you should be fine. Looking at the seasonal charts, blue line is where SPY is now. Red line is the average of the last 5 years daily close. As you can see, we're heading into mid-July here, right? We're mid to end of July, July 19th. There's going to be some bounce back and forth here into August, maybe even a little drop. Then in August, we're going to see a bit of a pull back to the upside. We're going to see what happens. Looking at the last 5 days, last week, we rose about 1 point. 1 point last week. Historically, SPY rose about 6 points the following week. And if this continues the way we had historically in the last 5 years, we may see a move back to the upside. We'll see what happens. What happened this last week? Earnings came to the forefront. Market leadership rotated with a pullback in AI, artificial intelligence related stocks, into defensive sectors. Excuse me. Earnings season is to be a test for AI stocks. Expectations remain high with growth in tech's forecast to be about 63%. We'll see if that happens. Tech sector expected to contribute 50% of the overall S&P 500 earnings growth. Everything is very concentrated in the tech sector. The Magnificent Seven, even the tech sector, AI, that's really where the focus is right now. And I'm not sure we're actually getting into a bubble on this. I wasn't going to, I don't think it's a bubble. At least I didn't think a month or two ago. But if if all of the focus goes into that, they could be pushing the tech sector up much higher than what it should be. And I think when we get a snap, it could be a pretty nasty snap. But we'll see what happens. Investors are monitoring what AI capital expenditure growth forecasts and return on investments could look like. They're expecting capital expenditures to grow 75% to whopping 700 to 800 billion dollars. Although next year or two might slow this growth a little bit. But it looks like all these big companies are getting into this in a big way. Big data centers opening up everywhere. I mean, this is just getting huge, bigger and bigger. I think a tweet or something that went out. Some famous, I'm not sure who it was. Oh my gosh, was she a basketball player or something? I forgot who it was. And she complained about when are we going to get our farmland back and stop these data centers or something along those lines. And I love somebody's response. Yeah, when you stop tweeting, something along that line. But all those tweets that you send out, or whatever you call them now, X's, I don't know, they call them X's. What do they call? They still call them tweets. That's why, right? We keep tweeting and social media and everything else, and of course it's fueling and AI, and oh my God, everything is AI now. But anyway, we'll see what happens. Fed Reserve continue to monitor data closely to keep interest rates on hold. That's kind of where they're heading right now. That's the general consensus, although the new Fed chair, Kevin Warsh, is suggesting that he's basically wait and see. He doesn't want to influence the interest rates. He's taking very much a hands-off approach. Doesn't want to be proactive. He's just kind of sitting back in the bush a lot of it. At least that's my impression. So we'll see what happens, but he is certainly wanting to control inflation. Their objective right now, most of the Fed vice presidents that are on the speaking tour, they're all talking about how their interest now is wrestling down inflation back down to the 2% that was their original target from a while back. They're saying that the labor market seems to be fine, so they're going to focus in on bringing interest rates down. Here's what the sector returns look like. Technology has lagged in recent weeks. Cyclical defensive sectors have gained. Financials have gone up there. Healthcare utilities have grown. But there seems to be a pullback here in some of these other, IT dropped 8.7% from June 1st to the middle of July here. So we're seeing a bit of a rotation out of consumer discretionary communications, IT, and materials, and it's going into financials, healthcare, utilities, real estate, industrials, consumer staples, and energy. Right? We're seeing a little bit of a little bit of that happening. So we're going to see how that shapes up in the next little while here. Q2 earnings forecasts have been revised sharply higher, driven by energy and tech earnings year over year. They're expecting earlier here, December forecast back in December last year, growth to be 13.9. Actually, we're looking at over 24% right now. That's the actual forecast. All right, here's the U.S. headline inflation, moved back to 3.5% for June. Core inflation ticked lower, came down a little bit. It's coming down. It was pretty high earlier during COVID and that, but it's coming down a lot here, and they really want to push this baby down. So we'll see what happens. All right, so here's the weekly stats. We had a drop in all three indices. S&P dropped 1.6% down. Year to date, 8.9. Still pretty respectable. Still pretty respectable. And if we look at this over the course of the whole year, if this continues in this path, the longer term path, we're still looking at what, 16, 17%, right? The Dow dropped 0.9%. And the Nasdaq dropped 2.9%. The Nasdaq is still ahead of us because the valuations of the tech stocks, right, and the Magnificent Seven, still at 9.8% year to date. So that's pretty respectable. So you're going to see the high, the mega caps. They're the ones that are going to reflect changes in pricing before anything else. So whenever there's a pullback, they're the ones that are affected first. And it's just like whenever there's a rally or a surge, it's the techs that get the surge first. So anyway, we're going to see what happens there. Coming up this week ahead, Monday, Tuesday, and Wednesday, we actually have pretty well low or no economic news scheduled right now. But we have earnings. We are starting earnings season sort of in a big way. The banks had already reported. In fact, they blew the roof off their earnings and forecasts and stuff. Double digits. Pretty well all the banks, all the other big banks that reported already. And if that's any indication, I think that our earnings season is going to be pretty good this year. Tuesday, we've got Schwab Interactive Brokers. They're sort of the big one. Wednesday, we've got Alphabet and Tesla reporting. Thursday, unemployment claims. No other high impact news. On Friday, we have Flash Manufacturing PMI, S&P Global. Also, Flash Services PMI report and new home sales. So relatively a light week for economic news. Of course, headline news is going to be the big thing. The war in Iran, and is there going to be peace? I mean, the trading room I talked about when they're talking about, oh, we have peace now, and we got a peace deal, and I don't know. Maybe I was just a skeptic or something, but I said to John, everybody else, my associate John, I said, you know it's not going to last, right? You know? Oh, yes, it will, Hugh. It's going to last because Trump said it's going to last. Oh, yeah, okay. Well, they're fighting. I don't know where. I know where they are now, but I haven't looked at the news. I'm afraid to look at the news. It's all going to change by tomorrow anyway. So uh, I guess the big news is FIFA. Was it Spain? Spain won over Argentina or something. And Trump is taking control. So, yeah, the next FIFA, we're not going to include Canada or Mexico. Okay. Okay, Donald, whatever you say, buddy. Right. Anyway, whatever. Week ahead, volatility, folks. Low Monday, a little higher on Tuesday because of the earnings, right? Alphabet, Google, right, and Tesla. They're going to be they're going to be moving the needle a little bit, I think. Schwab, Interactive Brokers, these guys. Wednesday, same thing. Alphabet and Tesla. We should probably look at Wednesday as being medium as well. In fact, I'm going to change that. I don't think it's going to be low as much as medium on Wednesday as well, because of the earnings. Earnings are going to push that up. When we get Alphabet, which is Google, and Tesla reporting earnings, I think you're going to see that push up to medium. Um, pretty strongly. We'll see what happens. Of course, if they have good earnings, it's going to bring up some of the other tech stocks as well. Thursday is going to be high, especially with unemployment claims, and on Friday, medium, because of individually these news items, manufacturing PMI, services PMI, and new home sales. Individually, they're not going to move the needle, but collectively, they might have a greater impact. So we'll see what happens on Friday. Again, Q2 earnings season this week. Expect elevated volatility also when President Trump speaks. He is not scheduled yet this week, but oftentimes we don't have the schedule until pretty well the day of, sometimes the day before. But I often see it in the morning that okay, he's going to be speaking at 4 o'clock this afternoon or something. So you want to kind of take a look at that. And a good website to look at that is forexfactory.com. If you go to forexfactory.com, they give you a pretty good schedule, and they're pretty accurate on their scheduling. So it's good to have knowledge of when he's going to speak because volatility will increase. So what happens is when he's scheduled to speak, markets generally start tapering off and trading in a range. There's not any big move one way or another, so you get a lot of range-bound trading, and then when he speaks, volatility will increase, and oftentimes he will push markets higher. Right? He has a way of doing that. That's what he does. Okay. All right. Next up, 2-minute tutorial. Just gonna talk a little bit about stop losses. So people ask me a lot, what do you do for stop losses? Um, I found, and I studied this. I used them a long time ago, and I regretted it. Okay, because I found that they generally do not work with options on anything really, but especially on SPY. And trailing stops could be even worse. Now, okay, so all right, so two things. When you put in a stop loss, you generally say, okay, well, I'll put in a stop loss for 10 cents or 20 cents or whatever, right? Well, market makers know there are stops underneath, and they will execute trades that are going to take stops out. I'm just thinking here if I can find a chart. Let me just pull up a chart here. I'll just kind of give you an idea here. Let's go back to this. All right. And I want to remove all the studies. Get rid of all these studies. Just pull these right out of here. Okay, there we go. Apply this. There we go. I want to kind of find a chart maybe. Is this a 1-minute chart? 1-minute chart. Let's see if I can find a situation where market makers will execute trades to pull out stops. Now, this is pre-market here, okay, but this can happen during market hours just as well as pre-market. So the stock is down here, folks. You can see the stock is now this is pre-market, but even during market hours, you'll see this sort of behavior every now and then, and you never know when it's going to happen. But you see, the price is here in this range, right? The price in this range down here, and generally speaking, that's where the price is, right? I mean, it's pretty clear. It's pretty clear, right? And but they will execute a trade like this. This is a trade that has, some people say, oh, that's an errant indicator. Well, there's no such thing. This is all computer stuff. Right? Computers don't make mistakes. What happened here was somebody had executed a trade that traded up here. And now this again is pre-market, but they traded shares up here, 755.98 or whatever. Could have been an automated order, could have been something manually, whatever. But they traded that. And why do they do that? Because knowing there are some stop losses on puts. There might be stop losses sitting in the bush with puts. Now, if your stop loss was, say, anywhere that would have triggered anywhere along those lines, you may have well been taken out. Okay? Let's say you had a stop loss. Okay, you're going to track this down, and when the stop, pulls back up to 755.80, that's when your stop will take you out and you'll be safe. Well, they can see that. So they execute trades here. Now, here's another thing. Very often they will execute multiple trades, like what happened here. This one here at 4 o'clock in the morning, they executed one there, and then another one at 4:01. In case the first one didn't take you out, hopefully the second one will, right? In fact, there's been some trades. I don't know what the volume or anything looks like that here, but this one here closed up here at 753.19. Well, actually, it closed down here. It opened up here. It opened at 754.90. So if your stop would have anywhere triggered along this line here, you'd have been taken out. You'd have said, "Wait a second, what happened? My stop's up there. The market is way down here. There's no way I should be having sold." And that's what they do. And this happens a lot, right? It happens a lot. So let me just see if I can find maybe another one. I think you get the drift on these things. Let me just see if I can. Let me see. What do we here? 1 minute chart style. 1 minute chart time frame. I don't know. 1 minute, 30 days. Just kind of get an idea as to maybe we can see something else that would trigger here. Okay. Uh, I don't think this is it so much. Usually you'll see just the one, the one trigger. Something like this. Here you go. This was probably during market hours. The market really went down, and some automated orders went right down here or whatever. I'm not sure why, but if your stop loss was anywhere down here on call options during market hours, this is it right here at 10:33. Yeah, the market went down. You had a stop loss here. You're taken out. So there's your stop losses, folks. Now here's the thing. If you had a stop loss down here, you just got taken out, right? Initially you'll say, "Oh, good, I just my stop taken out. I am so lucky, right? Because I just saved some." But you're not because you're watching this. Massive move to the downside. What's the next candle? It's a green and another green. Now you're sitting there. Oh, I don't believe this. If I would have stayed with this a few minutes longer, I'd have been right back up. Not quite to where I was, but I would have had a much smaller loss. And if you'd have waited a little bit longer, you probably would have been in profit back here, another hour later. And that's why stops don't really work. So now you not only get burned financially, but also emotionally. And frankly, I don't know what's worse. I honestly don't know what's worse. Um, so the way we do stops is a little bit different. We use mental stops. By that I mean I'm going to look at technicals. I'm going to look at how much time I have. I'm going to look at the reasons why the market went against me. Because not all downdrafts like that are going to be sustained and carry further down. Doesn't mean there's a reversal in trend. It could just be a one-off. Somebody said something, somebody did something, or there's a news report. But if you have time, right? If you have time, you can anticipate where these things are going to go. It's going to find some level, assuming you're going to the upside, it's going to find some level of support, bounce around. Chances are it's going to come back up. Those longer term trends are probably going to prevail. And once the negative sentiment washes out, you should be okay. You've seen this time and time again, where if you just held on a little bit longer, like it just showed you an hour later, you'd have been in profit. So why, this thing with stops, now on the other hand, sometimes if the market's just kind of drifting along, all right, which means you should probably not be in the trade anyway because you kind of got into it for the wrong reason. There's no reason that it went to the upside. You're just kind of trading because you could. So you got into a trade, and you should only get into a trade when there's a reason to get into the trade. You should stay in cash until you have a reason, a definite reason to get into a trade. But if it's just drifting along, I might take a loss of say 20 or 25 cents because I don't like it when it's kind of drifting. I don't mind if suddenly there's a big downdraft and suddenly my options are worth much less because of something that was said. Because I know that news will wash out pretty quick and it'll come back to normal and come back probably even higher in the short term, a little bit longer out. So a couple things to do there. Make sure you buy enough time. Always buy enough time and try and follow those longer term trends. Use longer term out expiration options. That's why we buy longer term options because the theta loss is much less, and you can weather those brief economic storms that just pop out of nowhere. And that's what happens. Those trades that trigger like that, you don't know when they're going to come out of there. All of a sudden, it's like a storm that just pops out of nowhere, a hurricane. Just oh my gosh, where'd that come from? Quick, run for cover. Well, those aren't stocks that I'm going to use the stop for. If I've got 4, 5, 6, 7, 8 days left, I'll just hold on. Hold on for the ride. Grab your seat and just weather it through. And usually I find that works extremely well, extremely well. Once in a while I get burned, but not very often. And that's kind of the objective with that. All right. So I hope that gives you a level of confidence if that happens. Don't panic, right? That's the secret. Don't panic. Buy time and don't panic. So let's take a look at our 2026 goal. This is where we're tracking all the trades in the trading room. If you were to start early January, as if you're only buying 5 contracts per trade of everything that we are discussing in the trading room, this is where you should be. $34,670. We had a loss there, 570 the other day for the one trade there. But generally we're doing okay on this. We're coming along pretty nicely. I mean, according to this model, we should probably hit $70,000 profit if you just trade 5 trades. And you can see kind of the average invested in there, what, 25, 30, 3,000, 3,500, per trade. And we're generally in there for a few minutes. We're not in there long. Generally, we're out of here, and again in a few minutes' time, right? By time 9:39 out of 10:02, 9:54 out of 10:02. We're not in there for very long. So we're just trying to get a few cents in there. And on 5 contracts, we're doing pretty good, making $200, 90, 50. Some are better than others. Some trades are really, really pretty cool. Here's one that we're in at, I gotta look at the time on that. These times are a little off. I gotta fix these up, but these numbers are pretty good. Anyway, folks, I got a poll for you. I want to know if you'd be interested in something like this here, folks. If we were to provide a prospective client, let's say you're not a client, you're interested in becoming a client. You want to know, well, what programs should I look at? What should I be interested in? The trading room or the inner circle? Pick of the day, day trade spy signal. What is it? And you want to have a meeting with us, either John or myself. We're going to give you 10, 15 minutes. All right. Would you be interested? Yes or no? Punch it up in the questions box. If too many no's now, we don't care. Then we're not going to pursue it. But if you're interested, we will endeavor and work very hard to make it happen for you. Okay, so that's kind of the objective. But it's not going to cost you anything, and it's there to determine what programs will work for you. We are not going to be discussing trades or if you're in a bad situation in a trade or, a lot of that kind of stuff. We simply don't have time, to entertain those kinds of questions. But we're going to go into what programs would be best for you. And that's kind of what we're looking to do. So I just kind of want to know before we pursue this. Okay. Okay. A lot of B's, yes. Okay. Sounds good. Okay. No, I'd be suspect. Okay, yeah, we are. We would be talking about what programs would be best for you if you're interested. Because I know there's sometimes some ambiguity about, well, I went to the website, but I'm really not sure I understand. Maybe I don't know whether I should be, in the trading room. I don't really know much more than other than what calls and puts are. Is this something for me? I don't want to invest a lot of money, or I'm afraid that if I have to, if I buy something, you say there's a 30-day money back guarantee, but do you really honor it? Yes, we do. Um, you know, so yeah, we're just kind of throwing that out there. Okay, a lot of people would be yes. Okay, sounds good. Now, if you're already a member of or you're familiar with us, it's probably not going to be of much value to you. Okay, it's going to be from most. Okay, that's good. We got a pretty good. We have a pretty good. Mostly bees, so that's pretty good. Good to see that. So, all right, folks, we'll talk about the trading room. That's what we talk about a lot. Trading room. We have other programs too. We've got, if you're just looking for an alert system, we've got the pick of the day and the day trade spy signal. Both very, very good programs. Success rate up around 88%, 98%. Well, I don't know, not 98, but 88, 90%, somewhere in there, between 85 and 90%. Excellent, excellent success. And we did a survey. What was it? We checked it with AI the other day about, well, what's kind of the success rate for day traders? And it came in at surprisingly low. I think it said like 70% or 60% or something like that. Wow. If we're doing 60, 70%, we're looking at bankruptcy. That doesn't interest us. But John and I, we have a very, very high success rate. It's not an accident. We've been doing this for, like I say, many, many years, and we kind of seen it all. And that's what we do. So John and I are the hosts every morning. These are interactive sessions. This is where you're going to learn and earn at the same time. Imagine that. You're learning and earning it while you're learning. You earn while you learn. Fully narrated. This is where our strategies come alive. Every morning we do this, 9:20 to 10:30. I know some people want to go all day with this, but we don't want to monopolize your day on this. We want to say, hey, listen, it's going to be an event. You're going to come in here. You're going to learn a few things. We'll discuss a few things. Look at the market. That's when I like to make my money is in the morning. I find the market responds much better in the morning than it does later on in the afternoon. Sure, there's money to be made in the afternoon too, but I find it's just a lot easier. Make your money in the morning. You feel good all day. Go out and do the rest of the, enjoy the rest of the day. If you miss it, or maybe you're on the other side of the world, you can't get in here. It is recorded for later review, and the recording is updated very quickly. So, trading room, it's been going now. Oh my gosh, we've been going now since 2010 on this. 24.95 for the year. I get it. A lot of times people don't want to spend that much, or they don't want to sort of invest all that much at once. Might maybe don't know if you're going to use it or not. Well, go with the quarter. 6.99 a quarter works out to about $54 a week. What is that? About $10 and change. What is that? Like a price of a cheap lunch? I don't even know if you can get a McDonald's lunch for $10. I don't think so. Maybe you can. I don't know. But that's not a bad price. That's not a bad price at all. And you actually have the advantage of tapping into John and my expertise and experience and knowledge. We've been doing this a long time. We know a thing or two. And that's really the best value for your money, right? If you know what calls and puts are, this is where you need to be. Very simple. There's not a lot of, you know, it's not a bad spot, and again, you can cancel it anytime and you get your money back if we have a 30-day money back guarantee on that. So anyway, all right, so let's take a look here. Boy, we're going pretty good with time on this. I like that. Um, and I will get to some questions. Questions. Let's go back. Oh my gosh. All right. Where do you think the market's going to go this week? I have no idea where the market's going to go this week. Let me just pull up I don't know, Fox News, Wall Street Journal. Let me take a look and see and if there's any headline news that maybe we should be looking at. I know in the morning, okay, so what's morning here has already been, is already sort of in the afternoon or whatever in the Middle East. Um, well, okay, war escalation. We want land invasion. Iran mouthpiece touts new missile boasts decades prep. What are they saying? Oh my gosh, let's see. Syed Mohammed Mirandi said Tehran introduced a new missile, buried its arsenal underground to withstand U.S. air attacks. Okay, so they wanna ramp up Fresh rockets, do they? Okay, well, let's just see. Let's just see where this goes. I'm just kind of reading some of the analysts here, what they're saying. Uh, it's not gonna go well. I mean, if they start, attacking, it's not gonna go well. Um, but you know what? I see that the market's kind of resilient to the war. It doesn't seem to be affected as much as what's going on with earnings and with AI. AI seems to be, and semiconductors seem to be taking more headline attention than the war in Iran. Of course, oil is definitely a big thing, but they seem to be used to that. It's funny because a couple of weeks ago things were looking really good. Some ships were getting through, and there's a lot of positive activity that was coming through, but it seems to have all come to a stop the other day when Trump said the ceasefire, that's off now. No more ceasefire. Wow. How many lives must be taken here? How much disruption in everyday lives and war do you have to have before people say, you know what, let's put our egos aside, let's get this solved and get on with living the way we should. Anyway, we'll see what happens. Oh my gosh, I'm starting to sound like an old 60s hippie or something right now. Blown in the wind or something. So, okay, next question. I don't know where the market's going to go. I don't know. And it doesn't matter. Let me just see what the Wall Street Journal says here. It doesn't matter because tomorrow everything's going to change anyway. All right, tomorrow everything's going to change anyway. So, um, headline news in the Wall Street Journal: Spain sinks Argentina to win its second ever World Cup. That seems to be taking more headline attention than the war in Iraq right now. We'll get into that tomorrow morning. Wow. Okay. All right. Well, that's so. How do you think the best strategy is to protect open positions from constant geopolitical news? Well, I think the best protection from geopolitical news, because it changes so fast and has deep consequences. So I think, first of all, make sure you buy plenty of time. What we do in the trading room on Mondays and Tuesdays, we will buy Friday's expiration. On Wednesdays, Thursdays, and Fridays, we'll buy the following Friday's expiration. And we do that because not that we want to be in a trade overnight or into those days, but your daily theta loss is much less when you have those kinds of numbers. And there's still ample volume and trading in those options that facilitate some profits. Okay. Yes, they are going to be a little more expensive, but you get it all back when you sell anyway. Okay. My gosh, that's not very photogenic. When I pull away from my camera, it freezes me, and it always seems to freeze me in the worst possible pose. I thank you for sticking around and saying, "Oh my gosh, this guy's ugly. How can he pose like that?" But the camera seems to know that. I'm going to get in the worst pose that I can get him on. Anyway, so buy time. When you go to sell it, you're going to get it back just by fewer contracts. Um, some people like to buy same day expirations, and I have in the past. I've made lots of money, but there's also risk. Same day expirations are going to give you some very good risk. And what happens with same day expirations, when the market goes against you, it's not a matter of if, but it's when. It's it's very rare that it comes back and gives you the profit that you're expecting. Even if the stock pops back up and goes back to where it was before, your option is not going to go back up there. Volatility volatility will take hold, and volatility and theta loss. When you're in the same day option, be ready to lose it. That's all I can tell you. Brace yourself. You can make a lot of money, but be ready to lose it. So if you buy time, you should be fine. All right? That's one way of neutralizing that noise, that 1 minute noise that comes in, and which is what happens when you have this constant headline news change. Okay, it's actually very difficult to try and trade through this. Can be done, but you have to pay attention and pay attention. That's the other thing. So I'm not sure that's a help, but that's probably your best line of defense. All right, some other questions here. I hope you and John have no plans of retiring. Not that I know of. All right. Okay. Okay. Thanks for that, Mark. By the way, I'm already a subscriber, but I'd be concerned if I were someone I didn't know. I'd be receiving biased information and a possible hard sell. All right. Okay. No. Okay. So yeah, this is concerning those 15-minute interviews or whatever they are. These are not hard sell interviews. All right. These are just, our aim is to provide you with information that you need to make an educated determination whether we are for you or not. And just so you know, before when we used to do that, we would say no to people. Not a lot, but if let's say was doing a brief meeting with somebody and I determined that this is really not for them, it's high risk for them, or they're not, you know, their temperament is just isn't suited, or their schedule or whatever. If I see it's not going to work for you, I'll tell you. I'll tell you, I said, this is just my opinion. You're welcome to come if you want and see how it goes. But I'll tell you that, it's going to be fast paced. It's not going to be really slow going. And I mean, the market is the market. If the market's slow, we go slow. If the market picks up and it's like screaming crazy, it could sound like a horse race or what we try to really discuss and narrate everything best as possible. And I'll pull back if John's talking, and John will pull back if I'm in a in a segment here. But no, they're not hard sells at all, not at all. They're information sessions, all right. So if you do know of anybody, bring them on, and not nothing hard sell at all. We don't want we're not here to hard sell you. We don't need your subscription, believe me. But we want to make sure that you have a good understanding as to what you're getting into. We also hear sometimes that people say, well, I got into it. I thought it's something, but it really wasn't what I thought it was. Or other people say, yeah, it's a lot better than what I thought it was. Why don't you do something different to tell people what it's really like? Well, we try to tell people, but we only have so much, uh, opportunity to tell you what it's like, Sunday nights and whatever else that we have. Anyway, I hope that answers that question. So, no, not hard sell at all. So, Linda's asking, is your success rate based on per trade or per dollar invested? Okay, that's a good question. So we have a high success rate, and our dollar rate is also very high. I don't have those numbers handy, but sometimes we do take hits, and sometimes I may have to wait a couple days before I recover all of my losses. And now here's the thing: I actually do trade after the trading room. I will oftentimes trade into maybe 11:30, sometimes even 12 o'clock if I'm on a roll. As a rule, I don't trade anything after 12 o'clock. Now, those trades that I do after the market closes, I do not include those in our stats because you're not part of that, right? The trading room people aren't in there. Our trading room, we tend to close it off at 10:30, maybe a little bit later, a couple minutes later, but that's when we make most of our trades. And we also, so if we're in a trade and we're still in a trade, we will discuss what our exit is going to be so that you have a good idea that, okay, if I say, well, okay, I'm going to watch this for a while, and if it hits this spot or that spot, I'll look to sell. Okay. And this actually happened the other day. We said, okay, well, we're going to see if we get a gift, if the market will come back and deliver. If we get to a break even, we'll sell it at that point. Okay, so that was what we said. Now the reality was, I got into, I think it was my trade. I actually went way past my break even, and I stayed with it, and I made some pretty good money. But for reporting purposes, because I told everybody I'll take a break even, that's what I reported, the break even though I actually made a lot more money. So there are times when we're going to kind of, get burned ourselves when we do those, but it is what it is. The other thing is this, Eagle Financial Products, our bosses, they insist that we close out all our trades by the end of the day for reporting purposes. So even though we may, in real, stay overnight if we believe the market's going to go back in our direction, but we have to report as if we closed off at the end of the day. And every now and then, we're going to get a trade that's going to show a negative number because of that. When the reality is we are in a trade, and the next day the market opens up in our direction, we made some money. So it kind of goes in a funny way like that. All right, next question here. And I hope I kind of answered this, Ronald. Since our option expirations are 1 week out, is it okay to hold overnight if you don't hit your goal, but feel good about hitting in the next day or so? And the answer is yes. Okay, so I should say that. So those of you who understand how we trade and what our goals are and what our strategy is, I know a lot of you will, especially in the trading room, you will hold overnight. Because if we see that there's an opportunity that I think, for whatever reason, maybe news or whatever is driving the markets, an overnight hold is not a bad thing. I did this actually the other day. I actually averaged in twice in a trade. I was actually underwater in this one trade, um, pretty dark in there, but I averaged in and I held overnight. I think 2 or 3 days, and ended up with a very nice profit because of that. So I sensed that the market was going to reverse back, and as it turned out, it did. So in real, we actually do at times hold back and hold overnight. But for reporting, we have to show as if we closed at the end of the day. Hmm. All right, next question. All right. Thank you for that, Mark. You're a top flight. Oh, okay. Thank you for that. Chris is asking, is there any truth that making 4 to 6% per trade sounds good, but do you have traders making much more than those gains? Oh yeah, as 70,000 per year doesn't sound that appealing. Curious, are those that are making much more than that so far this year of 34,000? Oh yeah. Um, yeah. Okay, so we actually have traders. In fact, in the trading room, we have traders that are blowing us, John and myself, out of the water. So here's the here's the thing. Traders in the trading room, the ones that are doing extremely well are the ones that have been there for a very long time. Okay. Those who have been there a long time are doing very well. Those who have been there for, a month or two are doing pretty good because they're learning the system, they're getting comfortable and everything else. And the reason these other guys are doing extremely well is because they don't, their attention is on the market and on their trades. Whereas John and I, our attention is split, right? And we are not able to multitask like some people out there can. We can focus very quickly, switch back and forth. But if I'm focused on my trade, I can't be narrating because I'm looking at my trade, right? And I'm making adjustments or whatever. Or if I'm narrating, my trade is falling by the wayside. And so our attention is very much split. And for that reason, a lot of times you'll see that our own trades are not living up to the trades that other people are doing because our attention is just distracted from our own trades. This happened to me, I think, several months ago. I'll never forget. I was so angry. I was actually in a trade, a real trade, and I was actually $1 up in a very short period of time. But because I was busy narrating the trade, I didn't have a chance to go over there and close my position and take the dollar. And then by the time, I did get it to close my trade, I was up only maybe, I don't know, I want to say 15, 20 cents or something, which was still pretty good. But, I left 80, 90 cents on the table because I was distracted in narrating my, the morning session. So, oh man, I was so angry at that. I thought, oh man, really? Why didn't I just put everybody on hold? So guys, hang on a second. Click, and I'm done. I got the money. Thank you. It happens, folks. It happens. So, but yes, there are people making a lot more than 34,000 dollars to year to date on that. So, and Osvaldo, thank you very much. Just subscribe to the trading room. Thank you so much for that. I think you'll be happy. And by the way, I don't think I mentioned this on the screen here, but we do have a 30-day money back guarantee. So really, you've got like a month to check it out. And if you really don't like it, if it's really not for you, just call up Eagle. There's the number right there on the screen, 570-567-0426, and tell them, you know what, I tried it. I don't see myself working with this and whatever. You don't even need an excuse. Just say, it's not for me. They give you your money back. Who does that? Huh, it's insane. Anyway, um, and that is true too, Mark. In the trading room, we are also trading relatively smaller numbers, right? 5 contracts for illustration purposes compared to what others might do. And which is successful trading would go well beyond the 70K. So when you see something like that 34, 35,000 year to date in that 2026 goal, that's trading $5,000. You're investing what, three, four, $5,000 or something. That's not a lot. That's 5 contracts. You're putting in 10 contracts, double that. Double that. You're doing 20 contracts. Wow, quadruple that. You'd be up $140,000 or something, right? So that's kind of the way it works. Folks, I see it's 8:55 right now. Here's what we're going to do. I want to give you about a minute here. Please punch up in the questions box a number between 1 and 100, and I'm going to pull over my official DayTradeSPY random number generator. Here it is right here. All right. Again, what I want you to do is now that's not the number. Okay, that's the number from last week. That's not the number, but I want you to in the questions box, and you got about 50 seconds. Punch up a number between 1 and 100. All right, 1 and 100, and then I'm going to give you a little more time here, about half a minute. And what I'll do is we will do the random number generator. And the person closest to it is going to get the ebook, Triumphs and Tragedies. And if it's a tie, let's say you're 2 numbers apart or something, it's 2 people 2 numbers apart, you both get it. Okay, so it's pretty cool. I've got this cat that we're cat sitting right now. She's really a pain. I got her trained to get her own treats. It's actually pretty entertaining. I open up the package, she reaches in with her paws and grabs one of these little treats. So, all right. All right, we are going to wrap it up here. 3, 2, 1. Okay, James K is the last one of it. We got everybody? All right. Now I'm going to clip over, just kick it over here to the random number generator. And I am going to hit the button. I'm going to go 3, 2, 1. The number is 75. 75 is the lucky winner. Let's just take a look and see who came the closest to 75. Robert P is at 73. Let me just write that down. Okay, let me take a look. He's 73. Okay. Okay, so far 75. Oh, Richard P is 77. He's 2 away. Okay. That's a new name. That's a new name. Robert P. Sorry, you're bumped. Richard Richard P. and it's 77. Wait a second. No, you both get it. You both get it. One is under, the other's over. Okay, sorry about that. Yeah, 73, 75. Yeah, you're both in line. Richard P., you're still in line. I take that back. And Richard Pine. Robert P. and Richard Pine. You guys are both in on this. And you guys are the winners. You will both receive the ebook, Triumphs and Tragedies. Robert P. and Richard P. Isn't that funny? All right, congratulations, guys. Way to go. That was very good. Very good. All right, so that said, John H. had 75. Ah, sorry, John. I don't see you. I don't see you on the board, buddy. Nice try. Nice try. I think he's got every ebook anyway. Oh my! I'm actually thinking of doing another ebook here. How to turn, how to make $30,000 a year, starting with $5,000. I just wonder if you guys would be interested in that. If you are, let me know, and I'll be inspired to finish up the ebook. All right, folks, been a pleasure. We'll see you next time. The recording will be up shortly. By the way, if you'd like to subscribe to any of these services, right? Here are the QR codes and a so-called DTS signal, pick of the day, and of course, a famous trading room. All right, have a good night, everybody.
And if you do it, just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it. what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have